So thanks for everyone for joining, and thanks to our panelists in advance. I guess the starting point here is that community banks, and I think we all agree this, play a critical role in our local economies. Yeah, I think many are feeling the pressure, consolidation, shrinking margins, and the intent of this webinar is really to aim to answer how to think about digital assets like stablecoins and tokenized deposits, and to think about those in terms of how they might ensure long-term relevance for community banks. And I guess the good starting point for that is really well, I'm going to lean on Joe for this one. Like let's start by defining stablecoins versus tokenized deposits, and why is that a distinction that's important to make at the start of this conversation? You mute, Jay.
I'm a Microsoft Teams guy, so I apologize for my Zoom foibles. Yeah, stablecoins and deposit tokens are very similar, but there's some key distinctions. So the stablecoins are digital tokens issued by non-banks. So they're typically backed one by one by reserves, and they're governed by the newly enacted Genius Act, but they are not FDIC insured. So this is money that does not carry FDIC insurance. Tokenized deposits, on the other hand, are bank issued, and they're digital representations of existing deposits. So they're fully FDIC insured and regulated under existing banking laws. And they're designed to operate within these new modern payment rails. So the distinction matters because it determines who carries the trust in the new payment ecosystem. Stablecoins live outside the banking supervision ecosystem. Tokenized deposits keep that innovation inside the banking perimeter.
Yeah, that's super useful. Thanks for that. And Natasha and I were just talking about Governor Waller today at the Payments Innovation Forum, and I'd encourage all the attendees and panelists to go and check out what he said there. And the key to payments is interoperability, and I guess we're gonna lean into that a little bit as we get into this. And I know that's some of the way you guys at Vantage have been thinking about this, but there's certainly a lot of noise around tokenization, and really, I think for most community bank guys and girls, it's been since the Genius Act. And from your perspective, like, why is now the right time for community banks to like pay attention to this?
Well, as you just mentioned, Governor Waller earlier today said that we're not to look at stable coins and deposit tokens as viewed with suspicion or scorn. They're welcomed into the conversation as part of the future of payments. So that's really a monumental shift in how everyone should look at this technology. So the Fed's not pushing the innovation themselves. They're inviting the public sector to come in and lead this innovation. That includes community banks, and that's what we see as our cue. We want, if the central bank wants a safe, regulated innovation ecosystem, community banks should be the bridge between the trust and between our trust that we have and the technology. So this is really an opportunity for us to shape the next payment rail, not just adapt to it.
Yeah, I totally agree.
I might just jump in there as well. I think it's really interesting. When we were talking about the latest comments just before the webinar started, Stuart, to answer the why is now the right time for community banks, having spent the last couple of months at a lot of small community bank conferences, the thing that has really kind of surprised me and actually alarmed me was that a lot of the community banks I've been speaking to are not taking advantage of some of the things that have been introduced that could enable them to grow faster things like the ability to share CIP information, the ability to share TIN information or to get TIN information from another institution. These are, in my mind, tools to enable banks of all sizes to grow more quickly. But I don't know from my conversations that community banks, in the grand scheme of things, are actually thinking about those in the right way. And as I understand it from having spoken with all of you three over the course of the preparation for this webinar, and Jay, the way that you explain tokenized deposits, it really sounds to me like it is a tool that is being handed to community banks to almost enable them to catch up, to claw back some of that margin that potentially they've been losing, and really sort of jump forward again in a way that they haven't been able to recently. So when it comes to why is now the right time, it feels like it's just a really good tool to enable community banks to jump forward when maybe they've been finding it difficult to take advantage of some of the changes that have been announced.
Yeah, I echo that. Obviously, I talk to a lot of bankers, and I think a lot of this has just felt like crypto. But then, we all know that a lot of lobbying went behind the change of administration, and so that generates some cynicism in this. But I'd point to Scott Besson talking about the importance of community banks, and I think that's why I'm so bullish on this, and I think that banks need to lean into it. I know you've been doing some really interesting things, Jay. Do you want to walk us through how Vantage Bank got started on this journey? Was it the pull from the market? Was this the regulatory kind of catalyst? What got you pushing in to explore stablecoins and tokenized deposits?
Well, so truthfully, we started from a risk perspective. We looked at what could threaten our deposit base in the next decade. And the answer was clear. Stable coins, payments, money leaving the financial institution and moving to these other businesses. And so, and there's an advantage there. Programmable digital money that moves 24/7. So, so instead of waiting to react, just saying, well, this is what's going to happen. We decided to learn early. So we've been on this journey for a number of years now. We've talked about and we've walked through several controlled proof of concepts. These POCs that we've done together with Custodia Bank, who's our technology partner in this. And we kept the pilots that we did, the proof of concepts small, fully documented, and we actually did it in coordination with our state and federal regulators. So this experimentation that we were doing, we were not doing it outside of the system. We were doing it, trying to modernize it from within. So using the existing regulations to make this work. And so we had very, very positive results from those POCs.
Wow, that's amazing. And you're talking about some of your partners, and we've got some on the call or on the webinar. What have you learned so far? Like where's the real world utility of tokenized deposits?
So we've learned a couple of things. So we learned that community banks can hold fiat reserves for stablecoin issuers safely and without owning the actual digital assets. So when you talk about impact to balance sheets, we're able to manage that. So that was one lesson learned. Two, we demonstrated a cross-border business-to-business settlement. So we actually conducted a transaction between one of our bank customers that's located in Mexico, and we did a transaction with an entity in Wyoming State. So we were able to conduct that transaction with all the normal AML, BSA provisions, and then some, and we reduced the cost of that payment from, if we would have done that as a normal international wire, it cost us somewhere around $7 for the transaction. Mm-hmm. we dropped that cost down to just 28 cents for that international transaction, all overhead included. And so that's pretty remarkable. And then the third thing that we learned was that we could create these programmable payments. So these are automatic payouts based off of, in our POC, we did a geolocation trigger. So we were able to have payments automatically released once a geolocation trigger was established. And so so that was proof that these tokenized deposits can support real world event-based payments. So so it was really interesting to run through these pilots together with like I said, our regulators. Programmability isn't hype. It's a utility. It's when payments move with logic, not just timing. Banks are moving from being just kind of an intermediary, handling the money, to really becoming a partner with customers' operations, and that's why I think community banks have a unique position to lead in this area.
Yeah, I agree, and I love the fact that it's as an ex-Texan, believe it or not, it's a bank in Texas that's pushing the boundaries here. Could you speak a little bit about the partners on the call? Like, how did you find Infinite, and what's their play in what you've set up?
So we've worked with Cable for some time now, and so Cable has been a wonderful partner in providing that quality assurance, that compliance testing, and instead of moving from kind of doing reviews after the fact or sampling, Cable's there to be right in time, right when the transaction's happening, real world, real time. Compliance testing and attestation. So we knew as we step into this new world, we needed a partner like that. Infinite has been a wonderful partner, and so we're onboarding onto their platform. Their modern core system allows us to use cloud native platform, modern APIs to integrate and build on top of, and provide this as an infrastructure. Many people know Infinite from being able to support BaaS banks and partner banking. And so this was a natural fit for something that we're trying to build today. We're trying to we're going to put together a platform to empower community banks across the country to participate in this with us, with Vantage Bank. And so we're building a modern platform on the Infinite core to provide these tokenized deposits and stablecoins, not only to our customers, but to customers, to community banks across the country.
Yeah, I can add a little bit of color to that as well. So from an Infinite perspective, we have an orchestration layer that allows all the community banks to speak to each other, building in wallets for the capability of managing tokenized deposits, as well as being able to orchestrate the payment, whether through the Fed or between the network banks, and again, tokenized deposits, or being able to also move in fiat currency, and being able to on-ramp, off-ramp the individual wallet holders. So given the fact that we already play in the space for payments with the Fed, and we're fully integrated on that, whether it's ACHY or FedNow. And then the fact that we already have the ability to hollow out the core with virtualizing accounts on our virtual ledger system and providing an API orchestration layer on top, we can now do the money movement, we can do the tokenized deposits and hold them in a store of value on an account, and then orchestrate money movement across banks as well. And we can get a little bit into that a little bit later as we talk about how does settlement work with these banks.
Awesome. Thanks for that. Natasha, the compliance model for this is completely different, right? Like the programmable money is 24/7. We're not batching, NACHA files overnight here. So that feels like a big shift for compliance teams. Like how should we think about it?
Yeah, funnily enough, they start to look much more like the UK, obviously where I'm from and where you're from, Stuart. We've had faster payments in the UK for as long as I was wanting to pay anyone and wanting to move money. And so money was moving at any hour of the day, and as small or as large as you wanted. So if I wanted to pay a friend, I would just ask them for their sort code and account number and be able to send them 50 pence, the equivalent of something like 50 cents, if I wanted to. So it starts to look much more like that. And I think there are 4 things that American community banks and larger banks need to think about here that really get changed in this world of smaller sizes of money movement much more frequently. The first is like verification just becomes so much more important. Money is moving more quickly, more money is moving all of the time. You really do need to know who you are providing that account to, who is moving the money. And so whilst we might be now in this world of money moves so much faster, I don't think that means that verification needs to move much faster. We still need to take care and make sure that we are really verifying who the users of these products are. The second thing is, before I founded Cable, I was at Monzo Bank in the UK, which was a startup, a little bit like Chime, but Monzo was a fully regulated bank. And we had transaction monitoring in the authorization loop for every single transaction. And so we could stop any transaction from leaving the bank before it was completed because we had this real-time transaction monitoring. And if you start to think about programmable money moving at all hours of the day, so many more individual transactions, even if they are of smaller amounts, that starts to make a lot more sense. Now, the caveat to that is that really requires an in-house engineering financial crimes team, a team there who can be writing transaction monitoring rules. And I don't know that community banks have the margin or probably the teams to be able to do that for the majority. Of course, there will be some that can. And so that actually leads to something which I didn't think I would say, which is I actually think there's room now for more innovation in first line control providers. So transaction monitoring providers are Cable is as Jay rightly put it, we automate the testing of your compliance controls. First-line providers like verification providers, OFAC screeners, transaction monitoring providers. I used to think that space had just been done. There are excellent options across the whole range of first-line of defense control providers for anything that you could need. And now that might be changing. I could see that there might be room for innovation there, specifically in transaction monitoring. That's another thing I would think about. And then the final thing that I think is going to be really interesting and that actually the government needs to sort out is there needs to be some way for victims of scams to be reimbursed. And in the UK, they have introduced...
Natasha.
Pardon?
This is America.
Yeah, I know. Well, yeah. And it's going to be, it's not working well in the UK either. So they introduced this authorized push payment law where consumers are reimbursed by the banks, even if the consumers made the transaction, if they were sort of scammed into making that transaction themselves. It's causing chaos, and it's very operationally heavy, and it's not working so well. So it's going to be interesting how the US thinks about that. But there's a lot here that actually changes, I think.
So I've obviously got a few years on you. It's probably evident by the way we look. But I was working at a bank in the UK when we launched faster payments. We spent an enormous amount of time trying to solve the verification of the user and fighting against really real friction in that process. And then, of course, the authorized push payment fraud came up and blindsided most of the banks, right? So we can prove that it's Natasha making the payment, but if Natasha's been scammed, I don't know which scam you'd fall for, Natasha. Is it a romance scam? Probably.
Who knows?
But
we've got some questions coming in that are very linked to this. Got a question which is, would risk assessments be in real time? How would small community banks be able to keep up with these types of risks in real time? That depends a little bit what I think we mean by risk assessments. If it's sort of the bank's risk assessments, obviously those are more ad hoc. But I'm assuming we're talking about like customer risk assessments here. Yes, the best practice here is that those risk assessments are programmatic as well, updated in real time. And there are tools and vendors that can do that for you. But yes, they should be in real time because the risk of an individual consumer could change in real time. That kind of links to the SAR FAQs that FinCEN talked about recently, where they
Yeah.
said that if you submit a SAR, you no longer need to do sort of follow-up reviews of that consumer that you've submitted that SAR for, or the business, of course. And actually,
Yeah.
I don't know that that's quite true anyway, because you should be raising the risk level of the entity that is connected to that SAR anyway, which should lead to further reviews. So yes, I think real risk assessment should be in real time, but I'm interested in, Jay, if you have a thought about that, given you're the actual banker on the call.
No, no, I agree with that wholeheartedly. I think that, and looking at the other questions, I think people are curious how you automate this. How do you work this if money can move 24/7? And so it does need to be built into the system. It does need to be systematic. You're not going to be able to manually do this. And so I think there's a real opportunity there with the service that we're putting together. I've got a colleague who presented today at the American Bankers Association convention, and announced that we are creating a consortium of community banks to partner together to offer stablecoins and deposit tokens on top of the Infinant platform, and powered with risk software from Cable and our token provider, Custodia Bank. And so part of that would be lifting some of that burden off of community banks and bringing it onto the platform, and it will be provided as a service. So as we build some of this out, we'll take that feedback and deliver solutions that can address those needs. Ali, do you have some some additional color there?
I'll add some content around the question around Infinite and the real-time activity around anti-fraud and AML. So we, as an orchestration platform, we connect to KYC, KYB providers, also AML and fraud in real time. Natasha kind of hinted at the fact how they were doing this in the UK in real time and being able to hit transaction monitoring in real time. We do that today out of the box, right? With every bank that we integrate with today, we have the capability of onboarding their provider for AML or BSA ML and transaction monitoring. If they have a service where you have the capability of being able to connect in real time, we connect in real time. If not, some banks still do the batch thing, which is okay. But we fully, for across all our payments, as long as you're coming in over APIs, we can connect to fraud and AML checks and reject the transaction in real time for any pay rail today, and that includes when you're coming in on the tokenized deposits.
Okay, thanks, Ali. And so, like, am I ripping out my core to do this, or like, just talk to me about Infinite? Like, how do I do this?
Absolutely not. So the way Infinite kind of grew, we're coming into the embedded finance world around 2022, where folks were still using these multi-tier players, right? Our key benefit here was actually sitting above the core, working as a core platform for the bank, but sitting above the core. And the way we achieve this is, if you have a real-time core, we can plug in on APIs, right? And directly affect accounts that are hosted on the core or accounts that are in our virtual ledger. If you're coming with a batch core, a legacy core, we connect over settlement files, posting files, and that's exactly how we're going to be doing that in the new world with the tokenized deposits. What'll happen is all the virtual wallets will be virtualized on our platform. We'll be able to manage the tokenized deposits, the balances, the limits, the fee structures, as well as if there's interest needs to be gained on these things, we'd be able to manage that all in our ecosystem. And then we would create for every single one of our banks working with Vantage in that network, they would all be under what we call a multi-tenant hierarchy. So we have Vantage sitting there amongst all of the different banks and being able to orchestrate the payments across. At the end of the day, what we would do is provide a posting file that allows the banks to settle between each other, updating the accounting system for that bank, providing the right file formats that they would be able to ingest, either that's at the GL level or if they have operating accounts that they want to leverage.
Okay, that makes sense.
Yeah. sorry, and this allows you to completely dissociate, right? Not worry about actually ripping out your core, but
Yeah.
simultaneously, any bank can connect into the network today.
So Jay, like Ali talked about wallets there, and we're talking about real-time monitoring. We do have a question about the characteristics of on-chain transactions and monitoring them. So, like at that level, like without seeding the answer, I mean, we can go super deep, right? Because all these transactions are on chain. But how deep should banks realistically go in this, in transaction monitoring and tracing? Because surely this is going to overwhelm compliance teams and probably regulators, to be honest.
Sure, and I think taking a step back, the question in the Q&A really is asking, will we rely on traditional platforms to kind of look at these digital wallets and monitor? So no, there are specialty platforms out there. We're using TPM. There's other chain analysis. There's several others that look at the wallets and can understand historical patterns, origins of the tokenized assets in those wallets. And so, you asked Stuart, how deep we should go because these tools could allow you to go very deep into the analysis of these wallets. So I mean, it's not our job to be a forensic blockchain shop, but we do need visibility. The way that we're approaching it is kind of the same as know your customer, know your wallet. So
Yeah.
kind of having an understanding idea of what that wallet's doing in a general sense. Um, is where the oversight should be.
Yeah.
With TRM, we see every on-chain event tied to those customers' transactions, and it's really compliance by design and not by cleanup.
Yeah.
And so I think it's important that we do have that visibility. That this is our ability to reduce risk and it's part of the structure of where we're moving today.
Yeah, that makes sense. And so there's a great question just come in as well, just on interbank settlement, and I think it's very specific to the model that you guys have been talking.
So yeah, so we're working towards doing interbank settlement, right? V1, I think Stuart dropped. V1, you may start off with doing some on ramping and off ramping through the Fed. However, the settlement across between different bank networks and being able to trade the tokenized deposits or move the tokenized deposits from one bank to another, that's completely settled outside the Fed master because we already have control of those deposits. That being said, there is also the opportunity here for us to marry the two approaches, right? So what we're actually doing is for every single tokenized account, you will have an addressable account through the pay rails, whether that's ACH wire and so on. So you can send fiat to that address. That account number, and we would convert that on the fly as it's coming in through the Fed to a tokenized deposit. And then that tokenized deposit then is also mapped to a coin on the ledger. So we're working with Custodia Bank to relay that message, issue the tokens, be able to add a transaction on the on chain, and we'd be able to tie the transaction ID directly to the transaction that came in, whether that's ACH wire and so on. And so as those capabilities are all going to be allowing you to go interoperably between the Fed payments and the tokenized deposit payments, stitching all of it together, giving you also the capability of being able to send tokenized deposits to a QR code that has the address for that account. So all those capabilities are interknit into the solution.
I'll take over from Stuart. I think he might be having internet problems. So to follow up, then the other question that's come in. So is this consortium with Custodia, is it only for tokenized deposits, or given you have that capability with Infinite, is it broader than that?
Well, it's both, and Ali was just explaining that. I think that this will allow you to transition seamlessly between deposit tokens, stable coins, and Fed. That's kind of the unique proposition that we have here. Ali?
Yeah, that's exactly where I was going with that. So what you're doing is you have on-chain activity with the stablecoin and mapping that to tokenized deposits. And so every movement that we're doing for the tokenized deposits has proof on-chain. And then integrating that also into your Fed rails where you can pull in fiat and convert on the fly to tokenized deposits and match that with stablecoin on chain. So we're doing all three of those aspects and intentionally, right? Because the stablecoins allow us then to do ease of money movement cross border. The tokenized deposits ease of money movement within the bank network. And then when you go outside scope and you go on with fiat, we already integrated with the pay rails on the Fed side that allow ease for on ramping and off ramping.
So I have a question, which is, given that, could then from a consumer's perspective, could a single transaction request actually touch on all three of those different rails? Could it be that I'm starting a Fed payment that becomes a tokenized deposit between banks that ends up as a stable coin internationally?
Absolutely.
Yeah, it would.
Absolutely. Because in the end, the end result is the recipient receiving the money. So how we're able to do that on the back end through leveraging their tokenized deposits, moving that through stablecoin, moving it back through the Fed system to change it back out to fiat. All of that will be transparent if we build this right. What we'll see is faster delivery, lower cost, and lower risk.
Interesting. And so we had a question that was, how would this scale to day-to-day consumers? And it almost could be that actually consumers are not aware of any of this. These are really just tools to help banks lower their costs, provide faster, better services.
Absolutely, but you can't forget about the programmability of these stable coins, of these payments. And that, to me, for businesses, is the real lever here. This is the businesses who rely on so logistics companies being able to pay as their product or is passing through customs. Maybe there's a payment procedure that follows there. And it's done dynamically, automatically, programmatically. So where a business has to submit an invoice, wait for payment, even in the fast world of oh, I'm going to do a wire transfer and that's going to be near instant for a business payment. The truck driver that just delivered that load of freight and is responsible for he's paying for the gas, he's paying for his time on the road, he gets to the warehouse and now he's got to wait for that payment invoice to be processed by an accounts payable clerk to issue a wire. That still takes time, effort, and money. And so being able to programmatically do that is going to be so remarkable. And then that can trickle down to other types of businesses that rely on invoicing to get paid. You build a smart contract that is self-executing, that, again, lowers the cost for these businesses, increases their ability to manage their cash position better. There's just so many opportunities there. So for consumers, yes, I agree. A lot of this will be transparent to them, but for business, this is going to be something that's really powerful, and that's why the intersection between this technology and community banks is so important. If you're relying on some of these big fintechs to do these payments for you, I don't think that they're going to have the relationships with businesses in the community to execute on these or to really understand what a business's needs are, because they're not local to the community. They don't understand why whatever good and service that this business provides is important.
Yeah, I like that. I'm back. and what happened. But that's one of the things that so excites me about this is the programmability, and I foresee a world where we're not only making these instant settlements happen, but we've got certain credit overlays, from in that smart contract, and a world actually where we could do real-time credit based on some parameters, and not like negotiate a line of credit that I need. Which as I think about it, programmability though, I do wonder, like, this is going to reshape like liquidity management for a bank. Like we're kind of re-architecting and the surface of the balance sheets of banks, and I think for treasury functions there's a lot to think about. Like Jay, as you thought about this, like how Vantage Bank approached it.
Yeah, well, I mean, Treasury clients are now going to be able to move funds, real funds, 24/7. Instant internal sweeps, cross-entity liquidity optimization. There's going to be really some cool opportunities there. So again, imagine, construction firm or healthcare group managing all the balances in real time across accounts and across their subsidiaries. That's what tokenized deposits can do. And so it really does turn cash management into something that's just faster, smarter, and insured. And speaking about insurance and these deposits, I did see a question come in that was asking about, well, how is it that you're going to incent, or how are you going to get people to use these deposit tokens when it's hard enough for them to understand the differences between stablecoins and deposit tokens? And I do want to emphasize one big thing. So the Genius Act forbids paying interest on these monies. As a tokenized deposit in an insured FDIC insured bank, we can pay. It's a deposit. It's a deposit. So we can pay interest, and we can incent those deposits to be within the organization. And so I think there's a real opportunity there for community banks to have that distinction over other entities, other fintechs, because we'll have trust, and then we'll be able to pay interest and FDIC insurance coverage. So those are big things.
And just want to clear that one up, right? So when Jay's saying that, he's mentioning specifically around stablecoins. Genius Act saying for stablecoins specifically, you can't provide interest. But because we're tokenizing the deposits, and these are deposits in an account, and which is FDIC insured, right? We have the capability of then paying interest on those accounts.
Yeah, for sure. I know, many of my conversations with banks, they feel kind of overwhelmed, outpaced by this, and Citi and Jason, some of these guys have been experimenting with tokenization for a number of years. And so I know there are firms out there like Stablecore, and I know there are various sort of partnership consortium models and shared infrastructure. Like, how should they think about this? What are the first steps here?
I think bankers, really the first step is they've got to step up and understand that this is not something novel or niche anymore. With the Fed coming in this morning and saying, this is, we're opening our doors to this. That should be a very clear indicator that banks better be ready for this, because this is reality. This is not something that is niche. So I would get educated. I would take the time to understand where the industry is going. I would look at experimentation. You connecting with us, any of us on the call. We can talk about the projects that we're working on, but this isn't just about our project and our consortium that we're putting together. Really, one of the drivers of us wanting to be at the forefront of this is we want to see community banks thrive. And so it's important that this innovation is continued across the community banking industry. So I would encourage bankers to begin experimentations, begin your own partnerships with your own trusted technology players, and figure out how can you deliver this. We're here. We're building something on Infinite with Custodia Bank, with Cable, with Vantage Bank, and we're trying to build something that would be scalable to support many banks, and allow community banks to compete against the really large fintechs and the really large global banks.
And I love that you're doing it, and kudos to you guys. I mean, let's try and put a number on it because you mentioned, the efficiency of the payment. So if I'm a bank and I move, I don't know, 10% of my payment volume in, onto some kind of tokenized rail, like what does that mean for me, like in terms of efficiency and competitiveness?
So take that 10% number. So that's the number that we're estimating, that if a community bank, we're not talking about large regionals or national banks, we're talking about community banks. Uh, our model with this consortium that we're building would be if you can move 10% of your Fed payments, your Fed wire payments, onto this technology, onto tokenization, that you would break even on that investment. And so everything after that, you're adding to your margin. So you're looking at cost savings for the cost of those transactions, being able to deliver a quality product to your customers without ripping out your core, because just as Ali talked about with Infinite, this is meant to sit next to your core, and be able to do this very efficiently, and very cost effectively.
Yeah, I mean that's incredible when I think about, most banks struggle for efficiency and to bring down their efficiency ratios. This is meaningful stuff. I mean, I have to say that, this is the first step really on a road of innovation, because I don't think we've really scratched the surface of what the sort of programmable money could do. And I've mentioned some of it that excites me around the credit side of the balance sheet as well. I think there's some really interesting product innovation ahead of us. I'm looking at the time, and I know we picked up a couple of questions as we've gone along, but I know also we wanted to leave 10 minutes or so for sort of live questions. So for the attendees, if we haven't covered anything, now's your chance. Otherwise, I'll just go round the room here just for some last comments. Okay, so just a question come in here. Yeah.
So the question is, how would this align compete with the recent changes in SWIFT, who also has announced tokenization? So again, it's about the scope. Tokenized deposits, banks will be able to move those. So those are or hold those. So I think that's one of the big distinctions. So we're also on SWIFT. Vantage Bank is, and so we understand the importance of SWIFT to move money internationally. What we're hoping is that we're able to move this all through tokenized networks and systems, so that again we have speed. Anybody who has had to work with SWIFT and create these SWIFT messages knows that it's not for the faint of heart. And so again, moving to tokenized technology is just going to make things faster. Ali, I don't know if you've got some feedback
so
on that.
I've read the announcement around Swift kind of moving into the space, right? Really, it's time to market right now for us, right? We're looking to be in market end of Q4, early Q1. Some of these bigger players, because they're dealing with billions upon billions in transactions, are going to move slower. They're going to move, they're bigger players in the market. We're coming in from a very agile methodology, very quick to market. We're going to be there a lot sooner, be able to not only get first mover advantage, but also be able to learn based on these mistakes much faster than these folks. So I would say yes. direct competition in that space. But however, where we would be early on in market, I would imagine that Swift and some of these other folks are going to take a lot longer to get there because of the size and the volumes they're trying to move. That being said, a lot of banks might find hesitation around, their cores not dealing with these deposits out of the gate. We have alleviated a lot of those aspects where we can now allow these banks tying directly into their core, managing the capabilities and automating the capabilities of tying into their cores in certain aspects. We've managed all of that out of the gate. So when Swift and some of these other players are looking at doing that, they're going to have a lot of operational overhead to get through at the bank level where we've already negated on any of those operational complexities, and allowed this as a wedge for the bank to start thinking about, hey, how do I manage some of these things outside of my core today? Whereas on the Swift network, they would be on the core, if that makes sense.
It does, and I'm not sure it's a controversial opinion to say that Swift might be slow. Any other questions? All right. Well, I'd love to just thank everyone for attending and to the awesome panelists as well here, because this was really great content and chat, and I think I learned a lot during this. Hopefully you did. Let me just invite some final comments and go around the horn. I'll start with Natasha.
Yeah. I did learn a lot. I think the thing that became most clear to me during this time was that for most consumers, they may not ever experience or sort of know that they are interacting with tokenized deposits or stablecoins. And as a consumer who struggles to sometimes understand why I would ever use stablecoins, that gives me a lot of hope for the longevity of this technology and also how it can be really useful for banks as a tool to lower to increase their margins, lower their costs, and be able to sustain longer as community banks without being bought up. So that's really awesome. And from the compliance perspective, I think it's really great to hear that Infinite has real-time transaction monitoring in the authorization loop. I think that's going to be vital. I think verification is going to be, as I said, even more important. And there might be new and interesting ways that we need to go about verifying transactions and customers and wallets. So really, really interesting. Thank you so much for all of your comments, Ali, Jay, and Stuart.
Yeah, thank you, Natasha. Ali, you're next on my screen.
Yeah, I think a lot of people don't know this about me. I spent quite a bit of time in blockchain. It's working on an interoperable blockchain technology for Ethereum and Bitcoin and so on. It was very difficult to find a use case where things kind of matched. I'm super excited around the Genius Act allowing and the work that we're doing with Vantage, allowing that technology now to be brought to the forefront and really providing a marketable use case around moving funds for across border, moving funds for supply chain EDI, whether it's on the with the IoT systems and so on, the way Jay has talked about the POCs that they were doing. And to me, it's just the excitement around that entire ecosystem and being able to now finally get to market with a proper use case that is revolutionizing things. And so back in 2018, I had started my journey on that front, and today it's kind of coming full circle. So I'm very, very appreciative of that.
Ali, I so much share your excitement. And years ago, I guess I can say I was at the forefront of mobile banking. I read a Cornerstone report where they said that mobile banking this is 20 years later, the mobile banking was the number one imperative. So some of these overnight things do take a long time, but I do think this is transformational for financial services. And Jay, thanks again. I mean, would welcome your last comments on this webinar.
So this is different researchers forecast different amounts, but I think most agree that this is going to be a multi-trillion-dollar shift in the payments industry in a very, very short period of time. And so it's very important that banks pay attention today so they don't get left behind. so that we're not waiting for others to develop a solution that may or may not be in Community Bank's best interest. And so we're excited to have such wonderful partners that are helping us build this. And like Ali said, our goal is to have this go live Q4 or Q1 of next year. And we are definitely looking for other community banks who are interested that want to experiment with us to reach out and let us know. And we'd be happy to talk to you and tell you some more details around what this initiative is.
That's great, and I think I'll echo an earlier comment. Anyone watching this live or later, feel free to reach out to myself or any of the participants here on the panel. Okay, I think that's us. So I'll hand it back to the master of ceremonies, Natasha.
Yeah, well, just thank you so much, Stuart. Awesome at moderating, and thank you everyone for joining. We'll send around the recording via email in the coming weeks. And as Stuart said, reach out to any of us if you want to learn more. Thank you.